Tell you what, the Federal Reserve is meeting this week to consider interest rates. Have you heard? Chair Janet Yellen telling Congress last month that the central bank expects to gradually increase rates as long as the labor market stays strong. But did Friday's healthy jobs report change the focus to inflation? Let's bring in Ann Berry. She is managing director of Cornell Capital. Good morning.
Good morning.
Let's talk about this because when they gave out their projections for 2018, maybe 3 or 4 interest rate hikes in 2018, it was before the tax reform bill came out. Doesn't that change how the Fed's going to assess the economy this week?
I think it may certainly do for the long term. The question is, what are they going to do this Wednesday as distinct to what the rest of the year is going to look like? I think the street's still very much expecting to see a 25 basis point hike in December. That's what's been indicated by the Fed in the past. And at the moment, particularly given the strength of the economic data we're seeing, there doesn't seem any reason to expect a change in that action this specific week.
What about the issue of inflation? Because that's something that, again, if you get this economic growth, this robust growth in 2018, inflation seems to be now the worry. What does that mean for rate hikes next year?
Well, there are a couple of different factors at work. On the one hand, inflationary pressure would be expected to come with the tax reform and the stimulus that's coming to the economy. But on the other, if you look at what happened, for example, to wage inflation this year, it's definitely crept up. But given that unemployment is as low as it is, at just 4.1%, the lowest it's been in 17 years, wage inflation has actually been surprisingly light. And I think the question is, can we see one trend catch up in the other? Looking ahead to next year, there isn't just tax reform. There was an announcement yesterday that there'll be $1 trillion infrastructure spend push in January as well. So I think certainly you're going to see the street focusing on, is inflationary pressure that's been surprisingly lagging this year really going to accelerate next?
It's going to be interesting, too, to see how Jerome Powell starts to run the Fed. And do you expect any big change when it comes to his policies or how he kind of evaluates things? Do you see any key differences between Powell and Janet Yellen?
Well, when Jerome Powell testified before the Senate in November, he certainly indicated he'd be sticking with Janet Yellen's vision so far of steady interest rate increases over the next 2 years, continuing to reverse the quantitative easing that we've seen since the financial crisis. So all indications would suggest he'll continue in the same vein. The question really is, will the other forces at work, the faster than expected tax reform, the potential infrastructure push, lead him to have to change materially what he's anticipated doing so far?
And I mentioned at the top of the segment that jobs report from Friday, a healthy report, the economy looking strong. I mean, do you think that type of job creation continues into next year? Are you bullish?
I certainly hope so, and hope that wages start coming up with them.
Ann Berry. Ann, thank you very much for getting up early with us this morning. We
Thank
appreciate it. Ann Berry of Cornell Capital.